Can dividends really make you rich? Absolutely. Hey, I'm Luke Downey. Here's another edition of Lessons with Luke. I've been investing for about 20 years, learned some good things, learned some bad things. I just want to make you a better investor. So if you like this type of commentary, make sure to like and to subscribe to our YouTube channel. So what is a dividend? Well, if you're a profitable business, sometimes you want to take some of those profits and distribute them to your shareholders. Those are called dividends. And so today I'm going to be walking you through one of my favorite dividend stocks that I bought years ago and continue to reinvest my dividends. And I want you to understand the process of what I went through to find this company and some of the things that make me believe that it's going to continue to win in the future. So the stock that we're going to be talking about today is none other than Home Depot. And I am on Yahoo Finance. You can do this at home. First thing you want to look for whenever you're finding a dividend growth stock, right? You want a company to increase their dividends over time is an uptrend. So if you look at a 5-year chart of Home Depot, what do you see? You see that this thing keeps climbing higher and higher. And then if you look at a max chart going back to 1984, that is the stairway to heaven, folks. That is the holy grail. That is what we're looking for. So one of the greatest companies ever of all time, and especially for dividends, is Home Depot. So first thing I want to see is it a good business? Is the chart going up? I can say that the chart is going up. What do great businesses do? They make great money. So you could look on the same page here and see that the revenue, that's the green bars here, has been increasing year after year. And then also they are doing pretty good on the profits. That's the blue area here. So if you're going to be paying out dividends, you need to have profits, right? And you want to have your numbers going up so that you can increase your dividend over time. So that's the first thing that I was looking for when I was buying Home Depot in 2017. The next thing that I want to look for, and you should be doing at home, is looking at the historical dividend of the company. And so you can go to NASDAQ.com, any publicly listed stock just about is going to be here. And you can see a number of years of their dividend history. So Home Depot in 2013 was paying 39 cents per share per quarter. And then what do you notice? The next year went up to 47 cents. The next year, 59 cents, keeps going up, up, and away, right? So you're just getting checks in the mail, mailbox money, folks. I started investing in 2017, so I think I caught the 89 cents per share. It felt pretty good, but what feels even better is recently they have increased that to $1.65. So that is ka-ching, ka-ching. So what is number two that we want to be looking for is a history of dividend growth, and Home Depot definitely fits the bill there. Now, whenever you are a monster dividend company like Home Depot, you will have a pretty amazing investor relations page. And that's where I'm at right now. This is the Home Depot investor relations page. And they have dividend calculators and return calculators and things like that to show you just how rich you can potentially be if you invest your dividends. So this is the investment calculator. I get excited when I see this, guys. I think I'm feeling the spirit. And what do we see? Dividend is $1.65. This is per quarter. The 12-month dividend yield is just over 2%. So it's not too shabby, but in a world where rates are effectively zero, at least a couple of months ago, it's not a bad option. Okay. And then what can we see going over the years? This is super, super cool. You can see the annual dividend in 2011 was $1.16. And the yield was just about 2.76%. Okay. And you can see this every single year. And that stairway to heaven, you want to see that just dividends continual increasing, right? And what you'll notice is when the stock price is low, the yield is typically high. And whenever the stock price is high, the yield is typically low. But, if you're playing the long game, doesn't necessarily matter. Because here's what can happen. This is called magic, folks. Total return overview. So this is going to look at how did the stock return over certain time periods with dividends and without dividends. Okay, so year to date, right, you don't really see much. Okay, 10 months, you don't really see much. 1 year, you don't see much, but you start to see something at the 5 year mark. I'm almost there with my Home Depot. So this is kind of exciting. Total return over 5 years is 142%. And that is based on 115% in share price gains and 26% is attributable to the dividend. And then in 10 years, it's pretty nice, right? So here's your total. This is your share price. Put that on top right here. And that, that's your dividend, and you get those big sticks. So you can see over time that a big return portion of a portfolio is going to be these dividends. I mean, if you're talking about 15 years, the dividend is 213% of the total return, right? So guys, this is the bonus level of investing. So, and you can do some of these total return analysis too. This is super cool. You can do a 10-year period here. And what do we see here? This is share price, and then this is with your dividend. So, I mean, it's just, if you're not reinvesting your dividends, you are missing out. And the cool thing is over time, that spread is just going to continue to widen, right? Because those dividend payments just keep going up, up, and away, and they contribute to more and more performance. So when you find a winner, stick with a winner. And to boil this all down, there's 4 things that I look for in my dividend playbook. Number 1 is focus on great companies. Great companies make great money. They're profitable. If they're profitable, they're probably going to be able to share some of those profits with me as a shareholder. Number 2, find great profitable businesses. Okay. That's all we're trying to do. That's, if you make money, you can split some of it with me in the form of a dividend. Number 3, reinvest those dividends. Think long-term, right? You don't really start to see the magic after 1 year, after 2 years, but after 5, 10, 15 years, the returns start to add up. And then number 4, just repeat 1 through 3. It really is that simple. So if you're leaving dividends out of your investment arsenal, I think you're leaving a lot on the table. And listen, if you keep a long-term mind frame whenever you're investing and you're picking great companies, it's really hard to lose. So this is how you win the game of investing. I'll catch you next time.